Yes, good morning, everybody. Here's Christian, the first time in English language. I started my channel yesterday, and many friends here in Thailand told me that I should better also make videos in English so that they can follow it. And I think also it's the better way. So I will try to make of my important videos always the English version. I will try that. And today I want to show my portfolio about what I bought the stocks in end of this year. And I will show you now. Second, please. So I think now you can see it. So I started with 100,000 euro, and now I bought stocks and gold for 82,000 euro at the moment. I still have cash of 22,000. I started with 100,000. Now, after the first days, it went up luckily to 105,000 euro. And yeah, I start with Alphabet. Alphabet is in my portfolio. I will talk more about Alphabet later. Everybody knows it, Alphabet, ex-Google. Then the next one is Anheuser-Busch. Anheuser-Busch is the biggest brewery in the world. Every third beer is produced by Anheuser-Busch. The most famous brands are, for example, Budweiser or Corona, like that. It's a very famous beer brewing company, and the business is really easy to understand how it works. That is what I like, and it's a great company. The next one is a gold mine, a gold stock. It's Barrick Gold. It's one of the biggest gold mining companies in the world, together with Newmont Mining. So they are both similar big. So I choose Barrick Gold because I think at the moment the valuation of Barrick Gold is more attractive than from Newmont Mining. And the second stock is Minas de Buenaventura. It's also a gold mining stock from Peru. It's a family-owned business, so I like family-owned businesses more than manager that are paid. So they have a revenue per year around, I think, around 3 billion US dollar, and they are always profitable, and the valuation of this stock is also very, very cheap. So I think there can be a good growth in the future. The next is Cognizant. Cognizant is an IT advisory company. They have many, many workers in India. They support the people in the USA, in Europe, all over the world. So it's also a fantastic business model. And they have been growing year by year for years, for decades, like 5, 6, 7, 8%, still growing very, very good. And it's also the valuation is cheap at the moment, not super cheap, but cheap. The next one is Fresenius. It's a hospital stock in Germany, the biggest one, and they also do dialysis. And Fresenius had a very, very hard years behind them because the stock was in the top more than 80 euros. Now it's 28. Last year it was under 20 euros. This was the lowest price. So the the stock imploded, and I think the stock will have a good recovery also in the future because the business was not too bad. They had a decline in the profits around 20% from the top, but that's not as much as you think how the stock was running. And there was two reasons. One was the management was absolutely not good, and they changed the management last year. And the other point is that because of COVID, the hospitals had to keep many, many free beds for COVID patients. And so they couldn't do the more profitable operations. So these are the two reasons together why the profit declined, and also yeah, the investors didn't like that stock because it's falling since years, so it's really out of sight of the investors. Grenke is an IT leasing company. It's also a German company. It's yeah, a small company, but a very good company. The stock also imploded. The top was over 100 euros. Now it's 23. And there had been also a reason because there were some doubts about the balance sheets and the management and compliance. And there was a short attack on this stock with many complainings. But they did everything what they could do. In this case, they changed the management system. They changed the structure of the company. So I think they are on a good way, and the bad times are done and the business is quite good. They are growing since many years, around 14, 15, 16% year per year. And yeah, COVID also had a little bit a negative influence to Grenke, but not too much. So I believe also this stock will have a good future. The next is a Chinese stock, it's Chinese.com. It's comparable to Amazon from the USA. They delivery online. You can order online everything what you want, and they have their own delivery system with drones, with robots, like that. And they are still growing. And the last days had been really good because China stopped the zero COVID policy. So there was a big recovery in all Chinese stocks now, and especially also JD, and they still have a good growth. The last quarter they had a growth about 18%, so that was really still good. And the next is Medtronic. It's a medical company. It's famous for their heartbeat makers. So they're really the best, I think. The best brand is Medtronic about the heartbeat makers, but they do many more things. And the stock also had a hard time. So it's cheap now. And yeah, the valuation is cheap, and I love this business because it does not depend on the economy. So I think this will be really a good pick at the moment. So that's why it's in my portfolio. And Meta is Facebook. They have also many problems at the moment. The most complaints coming about the metaverse, and they're really burning a lot of money there. But I have a different side on it. I will talk more about it in a later video. But the valuation is so cheap now. It's a price earning around 11 or 12, depends what profits we calculate in the future. So it's very cheap, and it's the biggest online platform in the world. And I think there will be a good future for it. And they are not dead like many people think. I believe in Meta, and they will go their way because they are the biggest company, and in that. So everybody who wants to do something online, business or private, they cannot ignore Facebook in the end. It's impossible. And the last two things are the ETCs on silver and gold. So I not invest only in gold mines. I also invest in gold and silver. And I think in inflation times like now, it's always good to have some gold and silver. And I think also the price is still cheap if we compare to the inflation data. And there can be also some growth for them. So that's why I want to put it also inside. Okay, so and now I will come back to Alphabet, my first stock, and I will talk a little bit more about that. And now I have to look for the data, how I can show you this. Yeah, I think it's here, yes. Okay, so here we see the Alphabet, the name, it's an Excel sheet, the currency is traded in US dollar. I show the numbers in US dollar. The last price was 87 on today or yesterday, 7 January. And here I have the numbers for the last 20 years in the fiscal year. I can change it also to quarterly results, so I can check every quarter how was the quarter in just in numbers. And here we see the difference between Alphabet and many technical stocks is they still were growing in the third quarter. 2022 with 6% was what was really good. We saw many big declines in other companies, so they are still growing even in the third quarter. And I change back to the yearly. And what else is important here? I not want to put too much information. So we see the gross margin is 57%. The EBITDA margin is 35%. That is quite good. And we have equity ratio, that is what shows the debt. And it's also very important to see in times of growing interest rates, how much debt the company have, how much they have to pay for it. And we see it's still low. The total equity is 251 billion and the total debt is 28 billion. So it's just 11%. And the valuation from Alphabet at the stock exchange is 1.1. I don't know, I think you say trillion in English, in Germany would say billion. And so this is all the shares that are there for Alphabet, multiplied with the actual share price is the market cap. So so if the stock goes up, the market cap will grow. If the stock goes down, the market cap will decline. So here the next is we had a profit per share in 2021 from the estimate was $5.41. For this year, the fourth quarter is still not finished, is a decline in profits to $4.76. And this year, 2023, the analysts estimate a growing profitability to back to $5.28. So here we see the profits of the last years per share from Alphabet. And especially we see it was always a higher profit the next year and very big jump in 2021 from 2020. So for me, it's just normal that the profits have to come down a bit because this was an extraordinary year for Alphabet caused about COVID and all these home people who stayed home and used more the computers and like that. So it's just normal that now there will be a little decline in the profits. And here we also see important the free operating cash flow. So what they generate more money, what more money comes in than out was in the last year $67 billion. So it's really a cash cow. And so if you think what they can do with all this money for new investments, and the free cash flow is 49 billions now. Yeah, so the next sheet that I have prepared is you can see it optical. The revenue growth is here. The revenue since the last 20 years up. I never saw a better balance sheets like that in revenue. The operating result the last year was exploding. You see that. What else is important? Yeah, very important also the average shares, and because here you can see if they give out more shares to get more money, or if a company buys back shares, that's always a good sign when they buy back shares, because then the profit of the company is for less shares. So the profit per share is going up if a company is buying back shares. If they put out more shares, the profit per share is going down. So we see at Alphabet that there was the last 2 years a declining shares number. So that's absolutely positive. All in all, since 2005, 2006, the shares numbers is okay. There was not too much growing. Also, the shareholder equity is a very interesting because here you can see how much profit they make year by year, how much they keep in the company, how much they make the company more worthful. And yeah, that's also amazing numbers from Alphabet. Good. So now I go back to another sheet. Okay, this is also a sheet about Alphabet. I will explain it. This is the last 10 years. In the yellow or golden, in the background, you see the revenues of the company, how they were growing for the last 10 years. The blue line is the share price of Alphabet. And you can see that the share price was nearly growing with the revenues. And that now in the end, here we see the revenues are still growing, but the share price is declining very strongly. But we also see the explosion before, after COVID, how deep it was and how high it went. So now it's a little bit declining. And the green line is the price earning. And this is very interesting because it tells us a lot about the valuation from the stock, how expensive or how cheap is it in the moment in a comparison of the profits of the company. So at the moment, we have just a price earning about 18 or 17, like that, nearly 18. And that's very cheap. That's the cheapest point since nearly 10 years. Even in the COVID shock, in the COVID crash, we had just a price earning around 20. So the valuation of the stock is now deeper, lower than on the baddest point in the COVID crash that we saw on stock exchange. And the highest was here in the last years around, where is it? Yeah, 33, 34. And if I scroll down a little bit, you can see in the average, the valuation of Alphabet is 23.4, the price earning, and now it's under 18. So we have an undervaluation to the average at the moment around 30% of the stock price. Yeah, for me is many reasons why I took Alphabet to my portfolio. I think it's a very, very good business model. They are, I don't know, is there really a better internet stock than Alphabet on the world? I don't know. But it's one of the best for sure. And they have a good monopoly. We are all using Google when we have any questions to the internet. We are all using WhatsApp. So they have a very good business model. Numbers of the past is really more than impressing. And if the profits are going down now at the moment a little bit, this means the stock price is also very cheap. From the top to the moment now, we nearly lost 50% of the valuation. So that's really, really cheap for a quality stock like that. And with still a great future. I'm thinking that Alphabet still will have a good future, that they will make, that they can grow the profits, the revenues again more to new record highs. And I think also the stock price will reach one day more higher prices. And yes, so that's why Alphabet is in my portfolio. One thing I not want to, this is not something for that you buy stocks or not buy stocks. I just want to tell about what I do and why I do it. And maybe some people who watch this channel, they find it interesting. So that's why I do it. But please not follow me or whatever. I just do it for myself. I'm not an advisor for that what you do. And if you do anything, you do it on your own risk. I'm not responsible for any losses or anything. And share prices are volatile. So they can go up, they can go down, they can bring you big losses. So never think it's a safe business. But one thing is clear, on the long run, all statistics are pro stocks, and I will talk more about that in the next videos when I have more time. So my next video, I think I will show more the stocks from my portfolio as I did with Alphabet now, so that you get a feeling more for the companies. And yeah, I'm very happy when you send me some comment or you have some questions so I can answer also. I hope my English was good enough for you to understand and can follow this one. Okay, thank you so much. Have a good day and see you soon. Bye bye.